America, what they do is that they are giving out loan to the people who do not possess a good credit worthiness. The people who do not have capability in order to repay the loan, but yet they are given loans. Alright? So after the banks gave out loan to these people, all of that loan has been collateralized, securitized into security in terms of paper, and then being sold to the other party. Being sold to the other party, either with discounted, just like I said just now, okay, with discount, okay, normally with discount, in order for the banks to get cash, and then that kind of certificate will be sold to the other party, to the other party, to the other party. So what happens if the borrower, the first borrower, cannot fulfill their repayment? So all of these people, all of these financial institutions will be badly affected, because all of them are selling debts of the people, the poor people. So all of that poor people cannot repay their debt, so all of the financial institution will be affected. So why in the first place the financial institution in America giving out loan to that kind of people? So that is the tricky part. So that is the tricky part, and that is the main questions. So the answer is because of the greediness. And why are the rating agency, so all of the security, in order for them to be sold to the other party, for example, in layman terms, they need to be rated by rating agency. Rating agency will give the rating A, AAA or BBB, or they have their standard in order to show to the investor. So this kind of investment is secure or unsecure, or high risk or minimal risk. So that is the purpose of the ratings. So the rating agency also give out a good rating for that kind of debts or loan. That is the second question on how or what happened to those experts, financial experts in America. So with that, some of the what we call not seller, the purchaser of the securities or the subprime mortgage security, CDO, are banks, are the banks itself, financial institution itself. So when that kind of debts are in default or cannot be repaid by the borrowers, so all of these financial institutions are also being affected. Being affected, so what they do is that they are trying to secure their position, so they do not want to give out any more loans to people. So more people cannot get loans, cannot purchase houses, so the business cannot be run, so the economy are being affected because of this loan. So banks want to secure their losses, they are held their position. They do not want to give out loan. This is happened in United Kingdom. So the Prime Minister, the former Prime Minister of United Kingdom is Gordon Brown, persuading banks to give out loans to people. And then they have purchased big shares of the banks, but yet the banks did not want to give out loan to the people and the companies. So the small enterprises in UK closed. Okay, most of the small enterprises in UK has been closed. So it will affect more to the economy and bring the what we call confidence and to the investors' confidence will be affected as well. So because of that, the pound sterling's exchange currency rate also depreciates. All right, and that will bring more problem, because any company who deals with import-export from outside deal with the outsider from United Kingdom. So all of the currency exchange will give a great impact and bad impact on their balance sheets. Okay. Alright. So that is sale of debt. Okay. How the present crisis emerged? So this one is the summary of what I explained just now. Up to early 2007, there was a boom in U.S. household credit. Financial institution raced towards offering house loans. Okay, so this is the problem. Financial institution in U.S. raced towards offering house loan on competitive rates of interest. Alright, often conceding necessary credit assessment. Okay, often conceding necessary credit assessment. So they are giving excuse. So no problem. You are low. You are poor. You are still can get this loan. Alright, and creating subprime loan. Alright. In order to refinance this loan, they were sold to factoring agencies, debt trading at discount, which in turn securitized them for the general public. Alright, a mathematical technique was invented to pool risky loan in a package called collateralized debt obligation (CDO), and then being rated and then sold to the other party. These securitized debts in form of CDO were then sliced up in and exported all over the world. So the big company will purchase that slice of the securitized debt, and when the debt being defaulted cannot be repaid by the borrowers, all of the financial institution which purchase the securitized debt will be affected as well. Alright? Once CDO exhausted and the available debts, derivatives in the form of credit default swap came into the picture. Right? This is financial engineering. Okay? They want to create more money from the loan, from the first layer of the loan, from the poorer people, loan from poor people to the bank, and then they cannot satisfy from that profit. That interest cannot satisfy their greediness, right? What they do is that they securitize, slice into CDO, and then credit default swap came into the picture in order to, they say, to mitigate their risk. And then by 2008, the credit default swap market had grown to $60 trillion. The size of derivative market overall, including options, futures, swap, etc., had increased from 55 trillion US dollar of notional amount in the mid 1990s to an incredible 600 trillion US dollar. Since all of these derivatives were unregulated, all right. So I've experienced attending one derivatives conference in London. So the participants are all the traders and the regulators and the derivative players, conventional, non-Islamic, all of them. And most of them say that the problem with derivative is that the regulation is very, very thin, right? There are no limit for anybody who want to play with the derivative instrument. If you want to play derivative until 1 trillion, 2 trillion, no matter. There is no limit. Right? So that's the problem, is because when the financial institution involved in derivative instrument, which a very huge amount of money, okay, so that amount of money will absolutely be disseminated to the other parties as well. So if you lost, so the other parties which related to you, the financial institution will also be affected as well. So something must be done. Regulation must be put in order to avoid unregulated and unlimited usage of derivative. So that is their sayings. All right. So okay, and then when house price drop in these circumstances, the obligors of house loan. Okay, we skip this one. And then summary of causes and remedies from Islamic perspective, inshallah. Firstly, money, as we said just now, diverting money from its basic function. So what we have to do is that we have to push any government to put back the function of the money, just like what Allah subhanahu wa ta'ala and Islam rules. Okay, So we can see the volume of the global international trade in 2008 is approximately US 32 trillion, 23